Hello everyone, Justin with Deep Dive Stocks here, and today is February 12th, and this is your After Hours Market Dive. Since it's Friday, we're going to take a little bit longer, take our time, look at some additional stocks, but overall, we have a pretty exciting After Hours talk. First up, we see the liquidity scanner, and this is the liquidity scanner on the daily, just to see how current overall market conditions are. And we can see that there's bullish liquidity being printed on VU, the main. I'm not gonna name all of them, but the main market ETFs: VU, IVV, SPY, VTI, QQQ. We had a spurt of bearish liquidity that lasted about a month, but current conditions are printing bullish. We have the same for the crypto side of ETFs, with only GBTC, which is if I'm not mistaken, a crypto holding ETF, printing bearish prints, quite substantial bearish prints. A little bit of bearish prints having been printed, but current new regime is bullish. Moving down to the commodities, gold, IAU is also gold, silver, sugar, and PDBC. We have bullish liquidity being printed as well, so quite bullish there. Bullish on the equity ETFs and bullish on the commodities. Moving down, we have bonds, which are also printing bullish liquidity. So we have commodities, bonds, and equity printing bullish liquidity. And we do see a little bit of bearish liquidity here when we get to the futures. Crude oil, what is YM actually? Average, the E-mini Dow Jones Industrial Average Index Futures is also printing bearish prints since August. We have NQ, GC, also they're printing bullish, but we do have SPX futures, ES futures printing bearish prints. So quite a mix, unusual pairings of bearish liquidity and bullish. We have bearish liquidity on futures, but bullish on the corresponding ETFs. But then we also have bullish liquidity noted on all three sectors, mainly equities, bonds, and commodities. And that's not typically usual, right? I guess if anything's not typical, it's not usual, but it's not typically usual. We can see the price action over here if we want to compare how liquidity, what price was doing as certain points of the liquidity scanner. But overall, bullish, but a unique mix of bullish and one that I think is raising a lot of eyebrows. So definitely worth keeping an eye on as the next few days. It'll be interesting to see if these bullish prints are just sort of fleeting moments of bullishness as we reach these all-time highs, only to find the bearish liquidity might come back. Moving onwards, let's look at SPX directly. So we did reach new all-time highs today. Of note, the all-time high was reached and almost immediately an aggressive ask walked in. So we can see that the recent candle has actually turned bearish on SPX. This is not usual for all-time highs, but as you know, it indicates that there's a good amount of profit taking underway. There's a good amount of aggressive ask walking in and quickly trying to exit their positions. The outcome is the same as usual. As long as if the bearish liquidity continues, then we expect movement down to LTPM L7, and that is currently 2% down. If bearish liquidity continues, as the pattern that we've been dancing with in these past few weeks with these videos, we should know that if the bearish liquidity continues, as that support is tested, it will drop down to the next supports, which are currently located about 4% down. So not terrible, but definitely within the realm of potential quick correction underway. But it is just interesting to note the overall sentiment maybe, or the market's ideas of the future with regards to reaching these all-time highs when almost immediately we saw that aggressive ask walk in. And this is on the daily. LDPS is again on balanced. And we have LDPM with the standard. If we quickly look to the 15-minute, see if we can watch some of this action in real life. So today is the 12th, as I said. I did not forget. So let's go back to the 11th. And let's see if we can't see anything interesting as this. So we have that bullish liquidity after the 11th. I'm going to slow this down just a little bit. And we're bullish. Price is stagnating, so we might tap LDPM L5 for support. We saw that flash of bearish, and then we're bearish again. We're flashing bearish. And so as soon as we start seeing this bearish liquidity start to pop through as that LDPM L5 and spot, which are usually the two that come together during these moments, there is additional concern that the support is going to fail and then spot's going to move down. And that's exactly what happened. It looks like right around 315. And since then, spot has fallen through the LDPM L5 support. We are maintaining that eager ask, slightly less aggressive than an aggressive ask, but an ask nonetheless. And we could see that the recent bar being printed on the 15 right before market close was the deep red variety, not the light red. So this does give additional concern and risk for movement down to LDPM L6, which is currently at, not bad, 0.5%, and then L7 is about 1%. So in the 15, we see an echo of what we saw on the daily, which is this bullish liquidity that brought us to all-time highs has slowly faded as an eager and aggressive ask has walked in and started pushing liquidity overall bearish and has pushed spot down. The resulting outlook on the 15 is it looks like we're going to need to test LDPM L6 and LDPM L7. And then if we go back to the daily, we see, as we said, the outlook due to this bearish liquidity is testing LDPM L7, which is, we said, about 2% down if memory serves. Yes. So overall, kind of immediate bearish prints as soon as the market reached all-time highs. So take that as you will. I figured it'd be interesting then to look at Tesla, who is currently undergoing quite a substantial bullish, aggressive bid cascade. We see that bullish liquidity. For a while, we were monitoring this sort of, it kept getting snagged on LDPM L6 resistance and then bearish, and then liquidity went bearish. So the outlook started being it's going to crash through these supports. But it looks like on the 22nd conditions, spot tapped LDPM L5 and responded with a bullish liquidity surge, and since then we have broken through those resistances and are now zooming upwards. The outlook from the daily view is that this is bullish, right? This is pronouncedly bullish, namely because there's that aggressive bid cascade that we should probably keep an eye out for. So we should probably put the lower order LDPMs on to give, and then maybe zoom in a little bit, see how things are going. So we're still in the, so nothing has reached up yet, right? This guy will be the first, the slider guy. So when he starts reaching up, then that's when you know you're getting that conversion from that aggressive bid back to profit taking and that selling. But we don't see that yet. So that conversion is still young, which means the predominance of the liquidity flow as LDPM is measuring it is this aggressive bid cascade. So that's pretty exciting. And we could see that the LDPM L5 did a really nice job of kind of squeezing things along. If we go to the 15-minute to look at this stuff in more granular detail. So we have this nice aggressive ask cascade. We have this scoop. This is a beautiful aggressive bid cascade. And then we could see the wave. And then the wave actually terminated with bearish liquidity, but right into another aggressive bid cascade. So that's pretty exciting. And that looks to be what is occurring right now. So on the 15-minute, when we zoom in, we see that there is some profit taking occurring right after this aggressive bid cascade. But whether or not that's going to trickle up to the daily is yet to be seen. The daily is still registering things from its point of view down at the, as we saw, there was no profit taking from the daily. So let's go ahead, let's keep the lower order LDPMs on and let's go ahead and check this out. So yeah, this is the 11th, this is yesterday. So we see the wave of those lower order LDPMs. And we talked yesterday about watching for when they are persistently like clustered and above spot like this. That is pretty reminiscent of some pretty zealous profit taking. So if we zoom in a little bit, then we get this bearish liquidity. At this point, like we already basically know, if you've hung around here for a while, you should be super familiar with this pattern. So we know that spot and LDPM are likely going to test, touch each other. If liquidity is bullish, then we expect a nice bounce. If liquidity starts turning bearish, then we know it might not be a successful bounce. So we do indeed touch LDPM L5, we survive, and then we get that surge of bullish liquidity, which was that aggressive bid cascade. Let's go back and actually step through that. On the replay, it gives the data kind of in chunks. So if you do too fast, you kind of miss. So we get that, bearish, and we're going to touch, our expectation is that we're going to touch LDPM L5. Oh, I see I missed it again. I hit the button. You gotta wait a second. So I think it gives you like the first half and then the second half. Haha. So right there, we see as soon as market opened, we get that aggressive bid cascade walks in, spot moves up 2%. And again, so we're scooping, or this is the wave from an aggressive bid cascade. We start getting some overzealous profit taking, but then another aggressive bid walks in, and we get to watch this aggressive bid cascade underway. So we have those profit taking starts kicking in, and that's where current conditions are leaving us. So just as before, we expect spot and LDPM L5 to touch. The name of the game is to look out for this bearish liquidity, which means that it might not be a successful bounce when they do touch, but perhaps always keeping an eye out on Tesla in recent times for the surprise entrance of this aggressive bid. And so if we do see another aggressive bid enter on Monday, we just follow the trajectory of how aggressive bids typically go, right? You'll see price move up, and as soon as you start seeing these lower order LDPMs persistently hovering around spot, then you know that the profit taking is really kicking in, and that's a pretty good time to maybe exit, downsize, wait for another moment, right? Because that's the thing with LDPM and LDPS, these moments become, trivially easy to find. So you don't have to marry the loser and date the winner. You can just wait for the winners to show up. And that's cool. You can see here another aggressive ask. Didn't do well because it was aggressive asking right to that organic bid at LDPM L7. So bullish outlooks for Tesla on the daily and the 15-minute. The name of the game is just going to be continuing to monitor for this bearish liquidity and keeping an eye out for any aggressive bid or aggressive ask cascades. But overall, surprisingly bullish for Tesla. Unexpected for me. But okay, moving on, we see Bitcoin. This is Bitcoin on the daily as well. We had this early bear trap that started around August 18th and just ended on Thursday, September 11th. It was successful in bringing spot down to LDPM L7 for support, and it looks like we're currently in the recovery phase of this bear trap where we are printing bullish liquidity and we are moving back above those LDPM resistances. So right now it looks like spot on Bitcoin is trying to digest through LDPM L6 in its way back above water, back above LDPM L5. The ideal is that you see these moves. We like seeing big, bold moves through these LDPM resistances, but as long as liquidity is bullish, then it might be a little turbulent, but we should get there. So it looks like the next resistance is currently at LDPM L5 at 120,918 right now. So give or take 121,000. And that should be where Bitcoin eventually finds itself over the next few days. If we zoom in to get a better look at local environments. Ooh, look at that bear trap. I mean, this is a bear trap too, but this is a nice one. I have to remember that whenever next time I'm, like making a video or writing something and I need bear trap examples. And I'm like, there are no bear traps. There is indeed. Alrighty, so this is, let's start from the 11th again on. So we do get a little bit of bearish liquidity, then we test above, we try to test LDPM L5, bearish liquidity kicks in again, we move down to LDPM L6, survive, move up above LDPM L5, get tapped from the bearish liquidity, and then bullish liquidity returned on at night at 6:15. We ride support for a while until the liquidity fails and bearish liquidity reigns supreme. We touch LDPM L7 for support. Sorry, I'm moving everything everywhere. It's hard to like auto scale whenever it's going in replay mode. So we get this bearish flow from Friday at 2 in the morning until Friday at noon, where we start printing that bullish liquidity again. And again, this is a really nice example of a bear trap. We have that LDPM is in its bullish stack. So we have LDPM L5, LDPM L6, that's a 6. And then LDPM L7. So this is a bull stack configuration for LDPM, but we have LDPS printing bearish prints. So this mismatch between LDPM and LDPS is what defines that as a bear trap. The expectation of bear traps is the same. We still expect stuff, the spot's going to move down to that resistance or down to the support, but the traps designator indicates that there's a high probability of like a rapid shift. As soon as this eager ask or aggressive ask leaves, as soon as its purpose is fulfilled and it just exits from the market, you typically see like a massive return of the opposing liquidity. And those are usually when you get those giant jumps above, like, spot will end here and then wake up the next day, right above or right at the LDPM resistance. So from noon, it was bullish, and then we rose, and now it looks like we're with bullish liquidity testing LDPM L6 for support. We did note that I guess I don't have the futures or the crypto one, but crypto liquidity on the 15, I did tweet about it, but it is bullish, so that does give some hope that this will just be a nice little bounce. And the name of the game is just looking out for that, making sure that there's no bearish liquidity that pokes through that might indicate that the LDPM support is in fact going to fail. But for now, things are bullish, so testing LDPM and getting a nice little bounce looks like that is what is underway. Then lastly, I figured we could look at GME. On the daily, we've been watching GME's bullish liquidity struggle, admittedly, against LDPM L7, this resistance here. It's doing a reasonable job. Again, we would like very distinct movements through these resistances. So getting caught and getting snagged isn't ideal, but it's not the worst, right? The name of the game in these moments really becomes if it's bullish liquidity, if it maintains its bullish liquidity, then ultimately it should still break through and then move to that next resistance, which is currently at LDPM L6 at 29.41, which is how far away? 20%, actually. That's not bad. Not bad at all. So we can see that we're still digesting that resistance at LDPM L7, and this is again on the daily. So if we zoom into the 15-minute, let's see what was happening. So we have that, let's watch from, is it interesting? Let's go, we have this bear trap. So let's right at the bear trap ending. And again, this bear trap because LDPM is in its bullish stack-ish. LDPM L6 and 7 are a little wonky, but if you just kind of squint, it looks, then we get this bullish liquidity, a bullish, especially there's no aggressive bid cascade there with that big candle. So just probably poor liquidity. What's liquidity levels? Yeah, look, almost zero, right? And that's pretty low. GME is known for having liquidity pretty 24, 12, but the name of the game is that liquidity was nearly zero. So this giant candle here that was 3% wasn't really the result of a squeeze, really, because well, I guess it is because there's no liquidities, but it's just kind of a natural byproduct of minimal liquidity, right? Like you have to move more to get transactions when there's minimal liquidity. So, and that's not really the same as like an aggressive bid or an aggressive ask walking in, where they're actually, those moments are defined by, you know, superb liquidity, really good liquidity, even though there's really high price volatility or price variance. But that's a conversation for another time, I suppose. So we're bullish going into the 10th. We start moving, we're probably going to tap LDPML5, we get that bearish liquidity, we get rejected off LDPML5 as a resistance, but we maintain bearish, we tap LDPML6. Yeah, this is looking familiar because then it changes, right? And this is all bear trap still. So then we bullish liquidity, test resistance, get snagged, test, kind of get snagged here for a while yesterday, it seems. Bullish liquidity is maintained. So we know it's still going to, but notice as LDPML5 moves its way down, this now becomes the start of a bull trap. Because now we have that mismatch. We have LDPML5 is now in its more or less bearish configuration with L5 and L7, and then we have bullish liquidity. So just kind of worth noting. But then we get, what happens? So we stagnate between this channel. We're kind of not really doing much. And that's where we ended. How delightfully unremarkable. So we're bullish liquidity right now, testing LDPML5. That's bullish. The expectation is that the support will not only hold, but promote a bounce up to LDPML6, which is currently at 25.38. And that seems, either way, it seems it bound by this channel, you know, just a gradual grind up. It looks like LDPML6 and LDPML7 are pretty tight in their formation. So bullish liquidity ending for GME ending the week with bullish liquidity on the 15 and bullish liquidity on the daily as it's digesting through that resistance is honestly pretty bullish, exciting. Disclaimer, I don't own any GME. I don't really plan on owning GME, but it is a very interesting equity, actually. Yeah, that's another really good example, because this aggressive bid kind of, is this an aggressive? It has the morphology of one. If it quacks like a duck, looks like a duck, and says I'm a duck, it might be a duck. I mean, it's kind of, I'm not going to sit here and digest it too much, but there's a lot of profit taking that happens, which is, again, normally what you would see after that aggressive bid cascade. I guess you could argue that there's slightly one here, but this is an aggressive ask. It starts scooping. We do get a little bit of a bid, but then this behavior isn't all that reminiscent. Like, we don't have the sequential, the hallmark of these aggressive bid and aggressive ask cascades is that there's this sequentialness to them, right? So we see here one goes down, or even here, one scoops down, and then LDPM L2 scoops down, L3 scoops down, L4 scoops down. Here we have a bid walked in, and then immediately we get all L1, L2, L3, L4 rise up and kind of start pestering the price with profit taking. So pretty interesting. Maybe worth digging into in its own video, but for now, that's all I have for you guys. Thanks for hanging out. This has been the After Hours end of week After Hours dive. I'll make that work. I'll figure it out. But all right, guys, until next time, happy trading. Have a good weekend, and I will see you guys then. Adios.